Dr. O, welcome back to our show. Housing market, Q1, maybe a little soggier than we thought it was going to be.
I mean, look, the price growth is easing.
Okay.
Because inventory, not
Okay.
because inventory is rising, right? When we say inventory, we mean the total number of homes for sale is rising. If you have more homes on the market for sale at any given point, right? More sellers are competing for buyers, right? Buyers have a little bit more bargaining power and you get more price cuts. And that's exactly what we're seeing right now as we head into the spring home shopping season. So what's really going on, right?
That's a great question. I should have asked you that. What's really going on?
Part of this, like a lot of people will say some crazy things. You know,
Yes.
like I hear crazy things like, oh my goodness, buyers are pulling back. Oh my goodness, the housing market is going to crash. Oh my goodness. It's just nonsense. It's just absolute nonsense, right? Part of the reason inventories increased is because we got a surge of sellers, last month. And, a lot of sellers come on the market. They think, hey, this might be the opportunity. I've been waiting for a long time to sell my house. Okay. I'm sitting on really low mortgage payments. I've been waiting a long time because I have a low mortgage rate. But maybe I'm stuck in this little house and like, I want to move. I want more space. Maybe some things have happened in my life, right? I got married or something, or I got another kid on the way and now I want more space. So even if I have a very low mortgage rate and very, very low mortgage payment, I might actually want to be moving. That's the first thing. So you got the surge of there's another theory out there that maybe in some markets, you got people that are facing higher insurance costs. And they're feeling the angst because things are kind of pricey now. And they are feeling desperate to get rid of that house, right? Because of the insurance costs. And here's a reason why I think this is kind of like, I mean, look, I don't want to throw cold water on people's theories, or I don't want to sound rude or anything, but look, think about it. Where are they going to move to? Where are they going to move to? Let me tell you something, right? Like, first of all, even if your insurance costs are rising, if you got a really, really low mortgage payment, right, to offset some of that, if you got a big increase in home equity during the pandemic, you're okay, mate. You're okay. And so at the end of the day, I think that theory is kind of like a little crazy in my opinion. If you weren't one of those buyers that bought at the peak, okay, with really high mortgage rates, 7.7 plus 8% mortgage rates, you're not desperate to sell. So even if you have a slowdown in price growth currently, because you had a bunch of sellers come on the market, you know what's likely? Very likely is that these sellers are going to realize, actually, maybe there's a little softness right now. Maybe I'm just going to have to delay my move again. And so they're going to pull back and provide price support for the housing market, right? Which means prices are not going to come down. And so again, like we saw that in 2022, second half of 2022, prices were kind of falling for 6 months.
Yes.
And then they started rebounding again at the start of 2023.
Well, the market got really, really hot. I mean, and then we went through that whole like FOMO, like 2020 was a weird year, right? First year of the pandemic. I mean, you had some people that didn't want anybody in their house and they weren't showing houses. The inventory was extremely low. People were hunkered down. 2021 was like a bonanza. Like everybody wanted to move and go somewhere else. There was a lot of movement in the market. There was a lot of crazy offers. I'm raising my hand. I made 2 crazy offers that, as I look back on it, I am very, very happy that they were not accepted because I would have been buying at the top of the market. I would have had a great interest rate back then, but I would have been buying at the top of the market, and I'd probably not be happy about the decision I made.
Good. Prices are higher than they were in 2021. So if you had moved in 2020, you'd be fine, man. You'd be fine.
So anyway, let me fast forward to today. All right. So I get a housing update from realtors in my area, and I've received 2 in the last couple of days. Both of them like estimating like the value of my home and then estimating like the like the intensity, whether it's a seller's market or buyer's market. And so here's what I saw for my property. I live outside of Chicago in the suburbs. My house estimate has dropped by about 5% from I would say the peak of last summer, 5 to 7% on this range that I received. And however, on the seller buyer meter, which points in one direction or the other, it had moved over the winter to very much of a buyer's market from a seller's market. Now it's pointed towards sellers pretty hard. So I mean, is this, I'm asking you this, is this a local condition that I'm seeing, or is this kind of
it is kind of local, right? So the Midwest, the Northeast, with very low inventory, are sellers markets, for the most part. Places where we've seen a lot of new construction, are, somewhat headed towards buyer's market. You have a lot of neutral across the country, but the U.S. as a whole has gone back into seller's market territory, according to the Zillow Market Heat Index.
Yes.
Which, by the way, you should go and download it. It's really cool. But yeah, again, you have more inventory, but I don't know in the past month, but I don't know how long that's going to last, because policy uncertainty that is going to cause, and by the way, tariffs are going to cause people to pause. And I mean, sellers might actually be like, well, if I can't get top dollars right now, I'm going to pull back.
The Trump tariffs are paused for roughly 90 days. Those 90 days run right over the top of the selling season. I mean, like right during the, like high tide for the real estate industry. What impact do you think the tariffs are really going to have on the seller's market?
What matters for housing? The labor market and income, right? So income,
right?
Financial wealth. So the stock market,
right?
And mortgage rates.
Rates, by the way, are down again slightly from the last measured period. So as of April 10th, I just looked at it. Freddie Mac's at 6.62 for a 30-year and 5.82 for a 15-year. They are virtually unchanged from the last measured period, which had been the previous week. Year over year, the 30-year is down about 0.2%. So it's like we've kind of like settled into this, I guess, norm. Historically, what rates are 7 3/8 or something like that is the average, somewhere in that ballpark.
We got a big drop in March.
Mm-hmm.
We got a big drop. Like the first 2-3 months of this year, we had mortgage rates were actually easing. And so there was a space there, where affordability had improved significantly. But you're absolutely spot on in saying that even though we've had a rebound in rates in the past couple of days, rates are actually lower than they were a year ago.
Yes.
Rates are actually lower than they were a year ago. And so with the bad news on the stock front, right? But the good news on the rates front, you end up with more activity in the housing market. And that's why, I am somewhat optimistic that you're going to continue to see home sales, outpace last year's low.
Okay.
I don't think we're going to see a big rebound because there's still a lot of uncertainty and people are kind of like worried. But in terms of the budget, in terms of people's budgets, things are slightly more affordable. And that ought to help support home sales in 2025.
All right. Appreciate your thoughts as always, Dr. O.